This is our Suburb Help report for July 2022. We'll be looking at what property investors need to know when they're looking at investing across the country. And in this episode, we'll be discussing the rental crisis. How did we get there?
Welcome to The Elephant in the Room. This is the podcast where we love to talk about the big things in property that never usually get talked about. I'm Veronica Morgan, real estate agent, buyer's agent, co-host of Foxtel's Location Australia, and author of Auction Ready.
And I'm Chris Bates, mortgage broker. Before we get started, I need to let you know that nothing we say on here can be taken as personal advice. We always recommend you engage the services of a professional.
Don't forget that you can access the transcript for this episode on the website, as well as download our free full or forecaster report, Which Experts Can You Trust to Get It Right? theelephantintheroom.com.au.
Okay, you may or may not notice a subtle change here. This is Suburb Help episode, not Suburb Trends. Suburb Help is a project that Kent and I have been working on with property writer Nick Bendell. We've been concerned for some time about the abuse and misuse of property data in some quarters of the property industry. So we're making it easier for investors to make better decisions about where to invest. So check it out yourself, suburbhelp.com. Now, this month, we've asked Kent to look at the rental crisis, where it's hitting hardest and the areas poised to feel it next. Kent, can you just kick us off briefly by explaining how you've tackled this challenge?
Yes, I've looked at areas. I use statistical area 3 as my standard. It's a cluster of suburbs, so you get some statistical significance. And I've looked at a number of variables, including the stereotypical rental increase, the median increase. Also looked at vacancy rates, but then extended it. I've looked at data a slightly different way. I've looked at the increase in rents as a proportion of income as well, and created some lists there. And it's interesting to see the dramatic impact this is having, especially in some of these regional areas where rental increases have gone up, but relative to their income, it's really having a significant impact. So that's a big problem.
Actually, on that, I'm jumping ahead, I know, but rental data is potentially more readily available than income data. Would that be fair?
Correct. So the data that I've used as a benchmark, as a line in the sand, was the census, the last census information, down to the SA3 level. And obviously, there's a new census coming out in a matter of weeks. So the data will be fresh, and a lot of the nerds like myself are rather excited about it. But it's a good tool of relativity. And we know that income hasn't dramatically risen in the last 4 or 5 years. So, yeah.
No, but will incomes in some of these regional areas have risen more dramatically than elsewhere?
Good point. I think the exodus of a lot of city folk moving into the regions, which is part and parcel of why prices have been going up, sale prices and rent prices. What will go with that will be obviously some income changes. So I think socioeconomics and income will be two of the biggest, most dramatic changes we'll see in the regional areas when we look at the census.
Oh, you're going to get very excited about all that. I know that. So, okay. Current rents, I mean, look, I'm always yelling at the television or yelling at, Facebook if I'm looking at a news feed or whatever about headlines around property prices and the property industry. That often a lot of lazy reporting, really, and also a lot of use of data without actually understanding what's about the data or what's underneath the data. However, it does appear to be that all these headlines around a rental crisis, there appears to be a huge amount of substance to these. Are current rents really at record highs?
Yes, they're the largest I've seen them in 20 years of studying the market. Obviously, there's been pockets over the last 20 years where we've seen rental crises limited to geographical areas, mainly mining communities or some type of large project that's created a boom. But this is really fascinating to see so many areas. So typically we've seen something in the order of around 85% of the country has had a 5% or higher rent increase in the last 12 months alone. So that's quite huge, and I've never seen anything quite like that before. The other standout is we're used to vacancy rates on average of about 3%. And if we go across all of the markets, I call every SA3 a market, they're around 1.5%. So vacancy rate's about half. And many of the markets that I've created a top 10 list we'll go through later on, prices have risen, in many markets by 10% or more.
You mean sale prices or rental prices?
Rental prices, yes. I'll call them rents just to not confuse it. So,
yeah,
rents have gone up. Now, there's been a few pockets where they've been fairly stable in the last 12 months, but they're in the minority. The vast majority have increased by 5% or higher, and a very large proportion, 10% or higher.
And what are we dealing with here? Are the regions worse or harder hit than the capitals?
I would argue that is the case, and the reason why I would argue that is if we step out and look at the income or the rental increase as a proportion of income, suddenly the regions jump to the top. The other thing that stands out for the regions is such a limited pipeline supply. And we look at building approvals for houses. They're very, very low in many of these regions. When we look at units, most of that unit activity is limited to the cities. And when we look to build to rent as a saviour for the rental crisis, as so many people, so many policymakers seem to think, they're very limited to the capital cities. So, it's very Melbourne-centric, very Sydney-centric. So I don't think we have a white knight coming in the form of build to rent to solve problems in these regions. So I think, now if I include the Gold Coast when I reference a region, that's been hit dramatically, very hard. So I think it'd be very challenging for a family, a lower socioeconomic family, in the Gold Coast or in somewhere like the Southern Highlands, where they're attractive areas. They're areas where people from the city can sell up. They've got surplus. They've got money to actually spend on a rent while they build a house or find the dream house. And this happened 2 years ago. This happened with the exodus due to COVID. But now that's kind of left us. But what we have now is people looking to work from home, and they're fairly comfortable working from home. So as a result of that, there's a crowding out effect, using the old economist term. So there's crowding out in many of these areas where the city folk have come in. They can outbid the locals, and there's a crisis in the regions. And my concern, I come from Newcastle, and the saying up here is the policy's always made in Macquarie Street, referencing New South Wales government. So I think the biggest problem you've got is if a lot of policies are being made city-centric, by people who are based in the cities, based in Macquarie Street, they would say, well, yeah, there's a rental crisis, but it's not that bad, because they'd probably be looking at some of the pockets of higher vacancy rates near them. And that is the case in certain pockets in each city. If you're in Melbourne, certainly Docklands has had, in Melbourne, has had relatively high vacancy rates for some time. There's pockets of Sydney, it seems to shift. The epicentre of high vacancy rates seem to shift from around Auburn or around Parramatta. Now it's kind of shifted back over towards the southeast there, or towards the city. But these pockets are drying up. It's a bit like a drought with puddles. So the vacancy rate puddles are starting to dry up. And if we start to see an influx of overseas, the borders opening up, people moving in from overseas, they will flock to where they can find a property. They're not bound to schools. They're not bound to things. So they'll go to where those vacancies are. So I think it's very likely that these vacancy rates will dry up very rapidly.
Interesting. Have you ever seen this level of rental demand in the past?
No. I think a lot of it may well be due to the fact that people can't afford, or people have given up on buying. So I think that's a big challenge. I've certainly not seen it. I think the one of the things that I've noticed, and I'll flip over to the property market, is the first home buyers just have been squeezed so hard when it comes to houses that they've fled pursuing affordability. So they've fled into these lower socioeconomic suburbs that have traditionally been under 500K and suddenly nudged them up to 600K, or nudged these suburbs up to 7. The suburbs where I grew up as a kid that were frowned upon, that were tough, lower socioeconomic suburbs, that hitting $1 million now in the western suburbs of Sydney. So, and then what you've got on top of that is a number of investors who are doing their search based on yield. So you've got that pursuit of yield chasing those suburbs that are sub 750K. So we're seeing a lot of these affordable suburbs, no matter where they are, they're drying up rapidly. And if you do try and do a search, it's very hard. I do it for our list. Suburb Help, we did originally, when we did that Suburb Help list, we did have lower price brackets for houses. We created different curated lists of where to look. And I gave up on the 400, and it was nigh impossible. I gave up on the 300, then I gave up on the 400. Now, there are some that appear in the 500K mark, but boy, it's hard. And you're trading off a lot to try and find something under 500. Gets a little bit easier as you move up, but it only starts to make sense, and the lists start to look quite nice at that 800K mark. And that's very hard for a first home buyer.
Yeah, it is. And it's hard for a lot of investors too. We know that people are trying to get into the market at $500,000. It's a lot of money if you need to save it up, isn't it? But it's not. It doesn't buy you much in the property market.
Yeah, and yet look, and what it does is it forces you into that different asset class, and it's a substandard class. The strata class is not going to give you the capital gains of a house.
Well, true. Although there are little pockets of it that will do very, very well. So there's really crappy houses you can invest in. There's some really good apartments, and so it's getting into the micro. I
should have prefaced it by saying on average. On balance. What's interesting though around yield, the calculation of yield is basically the rental income, as a ratio of the actual value of the property or the purchase price. And some people will calculate yield as to what the property will be worth if they sold it, and others calculate it as against what they actually paid for the property. Sort of, there's two reasons. There's different reasons why you would use each of those metrics. If prices start falling, which we're starting to see, we're certainly seeing that growth has stopped. And in some cases, we're seeing some falling prices. And if rents continue to rise, it's going to make some places look particularly attractive because the yields are going to be looking like they're really big. They're really good. Yeah, I think there'll be some, the numbers will play some tricks on us here. So what will happen is the rents by and large will stay where they are. They won't be as rapid because what we typically will do is use a rolling 12-month median for that. So what we may find is the rents hold or the rents don't go backwards, but the prices do go backwards. And so it all depends on vacancy rates, whether that'll stay the case. So if vacancy rates stay where they are, it's very likely we're going to see an ongoing improvement in that yield calculation, depending on how you calculate it, as you mentioned. Typically, the way I like to do it is look at the sale price of an individual property and then do an individual rental estimate per property. And then I plot those on a map. And you can see where the clusters are of the higher yields as well.
This has been sort of get back to some of the areas and examples that you've come up with in your research, but this situation really is the result of a series of poor decisions and unexpected challenges, natural disasters as well as actual prudential measures that have been really conspiring probably for the last 6 years to change the proportion of investors in the market. I recorded an episode for your First Home Buyer Guide with Megan, and she did a bit of research and sort of tracked all the things that have really impacted on the investor participation in the market since really 2016, if you go back. And to set the scene, there's something like 10 million households in Australia, and 32% of those are renting. That's 2.6 million. Actually, that does not add up. Her numbers do not add up. But basically what she's saying is 10 million households in Australia, 32% of those rent. Only 3.7 is public housing, and 26% of the rental market is owned by individuals. So that's 2.1 million properties apparently owned by your mums and dads investors, your individual investors. And leading up to 2018, the number of private-owned rentals was trending up, but then obviously slowed down. And obviously that's great for tenants because they have choice and negotiating power. But as the mix in the residential property market, that was scaring some of our regulators, and APRA, the financial regulator, started taking moves to limit investor participation. And they did that, and that started in 2016. And then the Royal Commission happened into banking, and of course then that sort of the dial got turned up a bit in 2017. Then there was the market peaked, and we all know that investors don't tend to buy in slow markets. They like to pile in when prices are rising. They don't necessarily like to buy when prices are falling or stagnant. So you've got sort of a almost 4-year period really until the beginning of 2021, sort of 3.5 years really from mid-2017, where investors weren't really participating that in great numbers. And then we also saw the federal government, the 2019 federal election, there was all that talk about negative gearing. That spooked a whole bunch of would-be investors. And you also, before that, you had the Liberal government changing depreciation payments for negative gearing investors. I mean, so all these things keep conspiring. And then, of course, you got COVID, and that itself brought a bunch of expats back, often displacing tenants as families moved back into their own homes. And then after the initial shock to the short-term rental market, as domestic tourism rapidly increased, you've got all this availability of Airbnb accommodation, the expense of long-term rentals. So, and then you've got natural disasters. You've got floods that basically rendering properties uninhabitable. You've got a whole massive demand. So there's all these, and these small town rental woes that never would have made a headline previously, all of a sudden is very much front and centre of the national psyche. So this isn't, people might go, oh, this is just a recent phenomena. I think the groundwork for this has been set for some time.
We've seen it coming for years, and as I've always said, unless the policy changes the dial with regards to supply, it's not really a good policy.
But I think what you're saying is really interesting as well about the build to rent. And we've discussed build to rent here as well, and we can see that there's significant investment in that area. But like you say, that's all in urban areas, and that's building more apartments too, predominantly, right?
Yeah. I'm fascinated by they call it multifamily in the US, and it's a friendlier term. And so many of the owners of multifamily are mum and dad investors. So there's so many of them that might be an 8-pack or whatever. So, and there's lots of tax incentives and local incentives for them. So I think what we need to do is somehow emulate some of those things. Not everything the US does is good, but this is one thing they do quite well. And the other thing I think we do well is the community housing groups. I don't know if you've had too many of I think you had a few community housing groups come through on the podcast.
We've had Michelle Adair. She's the CEO of the Illawarra Housing Trust, I think it's called. She's come a couple of times, and we might have to get her back, I think.
There's 32 of them odd that I've met as one of, I think, Power Group. Anyway, they run a really good operation. These are people who genuinely care, and they've got all the systems in place. So I don't think we need to invent too much here. We just need to amplify what's working.
Well, I've been known in the past to not think too much of social housing. The idea of feed a man a fish, you'll eat for a day, and teach a man a fish, you'll eat forever. It's so, my privilege is basically screaming loud even to say that. But I've certainly of recent times seen that, governments have, that's another thing that's contributed to this rental shortage, that governments have been consolidating their stock, their inventory, and not investing as much in social and community housing as well. So this is all contributing to this problem, right?
Yeah, I don't think you can leave it to the market in its own right. I think, as one of your guests said on a podcast a few weeks back, is the Singapore model works rather well, and I think the government does need to step in here and look at supply-related opportunities. So, and again, use the systems, but I think the regions are being neglected as a result. The exodus has put a squeeze onto them. There's a couple of things, a couple of spots I just wanted to call out. So I've got a couple of lists to go through, and the first one is just the increase in prices. And the first one is it's an area just to the northwest of Bendigo. So in that Bendigo region, Loddon Elmore. It's increased by 32%. Very small sample, so I won't spend too much time on that one. But the Gold Coast North, this is a big market. It's well known. And houses there have increased by 25%, rents for houses in the last 12 months. So, it's huge.
But even, hang on, going back to your Loddon Elmore, so that's northwest of Bendigo. It says it's a regional Victorian. It's not that far out of Melbourne, I guess, in the whole scheme of things. But
No.
that's the 32% rental increase. That's top of the list, right? I know you said it's a small sample, but that's whopping for a regional area.
It's scary. And when you look at that, that also appears on my other list, which is the as a percentage of income. And we're talking very large percentages of household income being lost to rent increase.
But that's assuming the same people are renting them, though, isn't it? So basically,
well, it's just the average. It's just we're looking at the average income for the SA3 as a line in the sand, as a ratio.
But what's probably happening is that those same people that were previously renting there are no longer renting there. They're renting somewhere else. Well,
where do you go? You're pretty squeezed. And when you get into the more regional areas, the moves aren't a couple of kilometres away.
No.
The moves might be 10, 20, 50K. So suddenly now we're looking at impact on schools, impact on jobs, impact on fuel costs, etc. So this is one of the reasons why the regions jump out. My heart is in with a lot of the regions, and areas like that jump out. But equally, the Gold Coast, everybody loves the Gold Coast, but the local families that are in that rental market, those that are in the lower socioeconomic brackets are being squeezed extraordinarily hard. So Southern Highlands is another one. I mentioned that earlier. That's the third. Now, that's jumped up by 24%. Sunshine Coast Hinterland is another one. That's jumped up 24%. Mudgeeraba Tallebudgera.
Okay.
So again,
Where's that?
That's a southern pocket down to the south of the Gold Coast. So that whole pocket, that beautiful pocket, is being overloved. And obviously, people want to move there.
Mexicans.
It's so stunning. Yes. Well, I think 2 out of 3 people from Melbourne want to live there. And then in that same area, Nerang, so right in the heart of the Gold Coast there, 22%. Now we start to step out. We go over to the Margaret River area, so the Augusta Margaret River. Now, again, that's one of those beautiful areas that you go to when you just want to get out of the city. Yeah. That's jumped up. The rents there are up by 22%. And I'll finish this list, then I'll go through and we'll talk about the vacancy rates here, because there's only really relief in 2 of these top 10. Pittwater, I think we all know the Pittwater. So that's jumped up by 21%. And I've got, 2 more on that list. Ormeau, Oxenford, again, in that Gold Coast pocket, southeast Queensland. And the last one on the list is Gympie, Cooloola. And one of the standout things for Gympie is it has a very, very low CIFA score. If you look at all the suburbs and their socioeconomic index scores, the average score I had for that is below 3. So there is not a lot of socioeconomic advantage in that marketplace. So a jump of 21% in rent for that particular location is pretty
some
scary.
of those other areas, obviously Southern Highlands, I would imagine generally it's got a pretty high CIFA score. The Sunshine Coast Hinterland, maybe. Pittwater.
Yeah. Well, I'll go through. So, okay, so the Loddon Enmore was CIFA average of 3.66. So that's very low. So big impact. The Gold Coast North, just under 6. I'll round it, 6. So it's just slightly above average. Southern Highlands is 8, so that's above. But remember, these are averages. So half of the suburbs are below. Sunshine Coast Hinterland might be a bit of a surprise there. It's just below 6. So it's not as advantaged as what you think. I think a lot of people just instantly go to Noosa and think about Noosa when they think of that part of the world. Mudgeeraba, Tallebudgera, that's closer to 9, so that's advantage. Nerang is close to 6, so just above average. Augusta, Margaret River, 7. Pittwater's 10, very snobby, the Pittwater. Ormeau, Oxenford, above 3, and we mentioned Gympie, Kulula.
Yeah,
Or
at 2.9.
Yeah, that's
So
just below
there's
3.
no real pattern, is there? It's not like only areas with,
yeah.
higher socioeconomic advantage are, it's not like it's skewing one way or the other. Or are you seeing other things in the data?
I'm seeing some early trends that they start. I call it out as an hypothesis for now until I can prove it. I think what may well happen, what I'm expecting to happen, is that the lower socioeconomic areas will flatline. You won't be able to get blood
that's
from
the thing,
a stone.
isn't it? Because at the end of the day, there's, and rents are capped by incomes in a way that property prices, purchase prices aren't.
Exactly. So I think that there will be areas where we'll see rent increases, significant rent increases, but they'll be constrained to a few pockets where the socioeconomics are much higher. So what I've done is I've picked a few of those areas, and the inner southwest around Sydney are standout. So there's a couple of spots like that I expect to still see price rises. So I did create a list there, and I forgot the third area that I targeted. So I've got Brisbane inner city was the third one. So I had Sydney inner southwest, Sydney inner west, and the third one was Brisbane inner
Brisbane
city.
inner city and Sydney inner southwest, both heavy unit population or content. Is that the word I'm looking for? A high proportion. Thank you. High density. And in fact, both of those areas have had high vacancy rates. Went up to like 13 and 14% in some areas immediately when COVID hit. And that's because, of course, the overseas students went back home, or the people working in the cafes and all the rest of it, they sort of went back to live with their parents. So there's, that was a lot of people working in the airport, for instance, lived in Alexandria. Apparently that was big hit.
That's the place.
And now that they've all gone back to work, and also they're sick of living with their parents, and students are going to start coming back in, and migrants are going to start coming back in. So, of course, is that sort of what you're pointing at there to say, well, those are the areas really where are going to benefit from that change?
Yeah, so we've seen the vacancy rates. Obviously, as vacancy rates trend down, that puts a significant upwards pressure on price. And what's happened in these locations is prices did adjust eventually. I think a lot of landlord pride gets in the way, and they try and keep their price where it was for the last few years and realise, hang on, it's vacant. It's been vacant for 3 months. What's wrong? Well, the price is too high. So they lower the price, and now what we're faced with is, coming off a low base, we will see percentage increases as a result of that, as vacancies start to get below 2%.
What are the highest vacancy rates at the moment?
Yeah, the highest. I've got a magic list here.
List. So
why don't I just just expand that? So some of the. I'm just going to make sure I got every row filtered properly, so I get it right. Some of the highest spots. I'll try and talk to some of the ones that make sense. Blacktown North has got a fairly high vacancy rate, but there's a lot of new stock that comes on and it just stays, and then it fills up and it doesn't stay that way. Melbourne City is probably the standout one that's been consistent. And it seems to just, it looks like it gets a run on and then it flatlines, but it's the moment, it's just over 3, but at its height, it was up where you mentioned Alexandria was. It was, well up above 10% for quite some time. But by and large, it's rapidly falling everywhere. And so the amount of areas that I've identified as above 3%, there's 12 of those out of 350 odd markets. So it's very rare to find any market at the moment with above 3%. There's concentrations of it, and I'm calling a market an SA3 here. Now, if I zoomed out and said how many suburbs, that would be a different. But when you average it out and you're looking at it at an SA3 level, there's very few above 3.
That is very small percentage. So roughly 4% or something sitting there, and 3% used to be sort of like you guys say. You'd be pretty happy with that, wouldn't you?
The average 3% vacancy rate was kind of the what I'd call equilibrium. It's a fairly balanced market. So that tells you how big this problem is, and I'm failing to see where
Can you
the
get
solution
negative vacancy rate? Is it possible?
No, because the way we measure it, it can be measured a few different ways. The way I measure it is I look at how many, this is census data as your denominator. It's how many properties are rented by real estate agents they do it down to actually an SA1, SA2, suburb, SA3, etc. So it's the number of properties that are rented by real estate agents. I use that as my denominator. And then the numerator in that ratio is how many have been listed for 21 days or longer. So, stale listing, as you would call it. So, being advertised for 3 weeks or longer. So that's my approach. And people have got different measures. I think what's important here is if it's a relative measure, you can effectively compare and contrast areas. And you can say, well, most of the opportunity for somebody to find a decent rent is isolated to the cities and the pockets of high density. That is the problem. And it seems to me that the build to rent opportunities, etc., they're piling in on the cities where these vacancy rates are above 3%.
We have discussed this before because, this is the thing, isn't it, that you've had a situation also where you've had enormous growth in property prices in the last, well, not so much the last few months, but certainly in 2021, and yet the actual apartment prices in some of these areas has done nothing. In some cases, potentially gone backwards, whilst the rest of the country's been on fire. Then you've got a situation where they've been difficult to rent. It's been a bit of a horrible situation for a lot of the owners in those areas, and then you've got a situation where you've got build to rent targeting to compete with those type of investors, which is a shame because then you've got other areas where there's these terrible vacancy rates, so the stock's not actually in the right spots.
That's the problem. And I wonder if a lot of the build-to-rent operators are focused very much on the city because that's just an easy place to find a shovel-ready site. But where they're needed is in a lot of these regional cities.
Do we have any data on the proliferation of short-term rentals or a change from numbers available for short-term versus long-term? I saw this really interesting article that was suggesting that in New York there are more properties on the short-term rental market than now available that are on the long-term rental market.
Wow. I'm trying to remember if that was one of the first podcasts we did together. And we remember we dug into it. And I spoke to somebody who managed a number of Airbnbs in and around Bondi. And this was right at the start of COVID. And a lot of people instantly just converted their properties over to medium-term rentals, just 6 months, or people getting out of offices or getting out of the house and working from there. But I haven't done any analysis of the short-term market at all. And I'm not too sure. Are things going boom when it comes to holiday accommodation?
Well, it appears
tourism?
to be the case because, the domestic travel has just gone crazy. And anecdotally, I've spoken to just a lot of people in a lot of different regional areas who have been pointing to one of the causes of a rental shortage in regional areas has been that people have converted their properties to the short-term rental market, but also quite often I've heard of people almost shamefully admitting that they've bought, deceased estate and done a bit of a quick tart up and put it on the short-term rental market because it's much more lucrative than the long-term rental market. So it is a bit of a problem when the numbers stack up for investors in that way, that is impacting on the vacancy rates. And with the legislation that took so long to come through in New South Wales anyway, and certainly like anything, you got a new economy and you got new technologies and all the rest of it, and legislation takes a while to catch up. It took so long to get short-term rental legislation through New South Wales and potentially other states as well. And so now it's through and it's almost out of date already, even with the restrictions that have been placed on it. And those restrictions are often placed on short-term rentals, like the number of nights, for instance, that could be made available, for different reasons, not actually to preserve accommodation for people actually needing to live somewhere. Those restrictions were put in place, I think, mostly to protect local owner-occupiers from being, the impact of too many partygoers.
Yeah, the Gold Coast parties. I think we've all seen that in the in my Apple News feed's got two things that it seems to focus on.
Why is that?
I think that's one of them. But the other thing that I see a lot of, and the sad news, is the amount of people saying I'm forced out and I'm living in a tent or I'm living in my car now. Now, I don't know if that's just my news feed and what I'm tapping on and reading, but that seems to be prevalent. Every second
Well, I might
story
have the
now.
wrong numbers here, but I was talking to somebody who lives down the south coast who was telling me that Bateman's Bay, I think there's a Bateman's Bay Facebook group or something, and in the Oval down there, or the Bateman's Bay Showground or something, there's something like 70 people living in tents there.
See, that's sad. So we're at a crisis, and I wonder if the government truly has got its head around how do you solve an immediate crisis. And they've done this in the past with effectively the Nissan huts back in the time. They built those and they were at least they were well constructed, and they wouldn't leak at night time, and they were kind of warm.
Well, I don't know. They'd be warm in summer. I'm not sure they'd be that warm in winter.
But if we did that at scale, it'd be better than a tent.
We've seriously got to address this. I think that this is absolutely ridiculous. And to be honest, I think I have to do one of my little rant videos about, should we really be renting our properties out in the short-term market in preference to rent them out to people who need homes?
Or do we need another word other than crisis? Because that's going in one ear and out the other.
Overused like that. Pivot and unprecedented. They're the sort of three words that are we're just hearing far too much of.
Yeah, paradigm shift was my big one for a year or two. I've got one more list to go through. So this is a list I put out called The Biggest Losers, and I didn't realise it came across as derogatory, and that was never the intent. This was the percentage of income that you've lost as a result of an increase in rents. And I did it over a 2-year period to try and kind of capture. So the first one was Noosa, 16% less income.
Yeah.
The second was Tweed Valley, 15%. Noosa Hinterland, 14%. Richmond Valley Coastal, 14%. Here it comes, Loddon Elmore. We mentioned that one earlier on, 13%. Broad Beach Burleigh, seeing a bit of a pattern here, down around the Gold Coast, 13% less. Gold Coast North, 13%. Southern Highlands, 13%. Coolangatta, 13%. Coffs Harbour, 12%. That rounded out the list at number 10. And if you look at somewhere like Coffs Harbour, there's a very, very large proportion of the suburb itself, Coffs Harbour, that has lower socioeconomic neighbourhoods or households. So they're hurting bad.
And add this to rising energy costs and rising cost of lettuce, amongst other vegetables and other just general cost of living. The word crisis, it's overused but appropriate. This is a situation where people are not able to find rentals. If they can find it, it's massive increase compared to what they were previously paying, and then what are they foregoing in order to be able to put a roof over their head. So I really do feel like we've just got a bit of a perfect storm in this country at the moment. It's like everything is hitting, all the consequences of
at the one time, and it's not just us. If these same problems appear to be certainly in the US, the same in Canada, the same in the UK. A conspiracy theorist would say, what a coincidence. But it's sad. It's just a very sad situation. And, we do have the ability to solve it. And I'd put submarines on hold and focus on housing.
Suggest people live in submarines. Yeah, that is. Yeah, we've got to worry about blowing up China. What in 20 years or something? What is happening in America? Is this same sort of rental crisis happening in other countries?
Yeah, it is. So a lot of it's isolated to cities. So certain cities have different situations. It does look like the interest rate movement in the US is having a bigger impact there on their housing market. So I think there's a lot more correction happening on the prices. But certainly these themes, these patterns are effectively ubiquitous across several Western countries.
But if you look to America after the GFC and obviously the big subprime lending catastrophe, and look, I've only been to America once, it was a long time ago, so I haven't seen this with my own eyes, but I understand there's quite a number of cities with tent cities on the outskirts of them.
Yeah, San Francisco is common, the tent city, LA as well. So, obviously the politicians, there's a lot of, politics at play here and finger pointing, saying it's a result of one-sided politics, etc. But it's a sad problem, and I don't want to see rows of tents with young families at all. And given how rich we are as a country, let's just solve it with an emergency situation right now.
Yeah.
So
how are we going to solve it when we run the country?
I think you need to. Well, how do we solve it here? I'd keep on looking at the Nissan Hut solution. Look at what they did with the flood zone up in Lismore. They went up the road at a large sports oval there that was up and high outside. I think it was Gunnellabar or one of those particular suburbs, and they've allowed tents and temporary accommodation there. We need that at scale.
All right. So, okay. It's interesting. We've got a bit of a theme happening this year, really. We are talking about affordability in its various guises. And everyone, if you're wealthy enough, all you worry about in terms of housing affordability is whether a first home buyer can buy their first property. We're not talking enough about the affordability as it extends to people who literally can't get a roof over their head. And we are talking about families and families with jobs. It's not even like it's purely the disadvantaged now. It's that extent that disadvantage is creeping beyond the typical demographic. So, yeah, I don't have any solutions, but at least we're raising awareness, and maybe that we're just part of the conversation.
Yeah, well, rattle the cage. Let's rattle the cage.
All right. Thanks, Ken. Enlightening as usual, and I think too, if we sort of go to our Suburb Help theme on this one, if you like, the danger for investors if they are starting to hunt for yield, there's going to be some poor performing assets that are going to start looking like they've got great yields. And I think that's probably the danger for investors, sort of lurking behind. If we take our socially aware hat off for a moment and go back to being capitalists, that's the danger here that the investors are facing, I think.
Yes. Well, what we've done with it, we've curated a number of lists. There's over 40 different lists there. So whatever your appetite is, we do have the yield lists in there to by city, and typically what you'll find in the highest yield, and there are some filters in there that try and pick the best in terms of other variables other than just focusing on yield, but the heaviest weighted variable is yield, and as a result you'll see most of those lists are units, and typically and on average you'll find that units will return around half the capital growth. Now, a well-positioned unit or a well-purchased unit in the right spot might do quite well
but
on the
those
short
ones
term.
typically won't have high yield.
Yeah. So I think, but the face of the urbanisation of the cities is obviously, it's a big thing now, and houses, it's very hard to find a house in Sydney under 750k. So units look very different today than they did a few years ago for that fact. But the searching by yield alone, there will be trade-offs.
I think a big message in what we're trying to achieve with Suburb Help is this idea of you've got to democratise data so people can make good decisions themselves if they've got the right data in front of them. But you need expert advice to take it to the next level. You know, you really do need local expertise, and there's too much of this data being pushed out there that you and I have been ranting, you more so than me even, because you know how the data's been used and abused. That's been pushed out there and leading people in the wrong in directions really that aren't going to serve them well in terms of their financial future. So, but data is a very important part of the process, and understanding sort of what goes into a solid area to invest in. But then the art comes down to understanding the local market and what type of property is going to do well, and how to identify that, and how to work out what it's worth, and how to negotiate, all that sort of juicy stuff. So data will get you so far, Suburb Help will get you so far, and then you need that expertise.
Very good. I had that exact same discussion today, that you can locate an area with science, and then finding the property comes down to art.
If you're looking to buy your dream home or an investment property in Sydney's inner west, eastern suburbs or North Shore, my team and I can help you buy without regrets. Reach out via my website, gooddeeds.com.au.
If you're looking to buy your first home, thinking of upgrading into a new one, or purchasing an investment property anywhere in Australia, my team love to carefully guide you on this journey. And most importantly, get the finance right. Reach out via our website, wealthful.com.au.
Thanks for joining us. We'd love to see you again.
And remember, don't be a Dumbo.